Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for Tuesday, October 11th. Well, the dollar gained overnight as the market becomes more and more convinced that the Fed will raise rates this year. Despite Friday's weaker than expected non-farm payrolls, the probability of a rate hike in December has risen to 68% from 64% before the NFP came out. Hillary Clinton's improving position in the polls is also helping the dollar. The market's been worried about the possibility of Donald Trump getting in. Finally, U.S. Treasury yields moved higher as oil prices jumped, and that helped the dollar too. The yen, on the other hand, weakened as Japanese stocks rose. That correlation may not make much sense to a lot of people, but that's the way it works, usually. Now, the New Zealand dollar weakened. That was the biggest move after RBNZ the Reserve Bank of New Zealand Assistant Governor John McDermott said in a speech that further policy easing will be required to get inflation back into its target range. As you can see from the graph, the New Zealand CPI, the yellow line, is well outside the target range. While the CPI for tradable goods, the dark blue line, is way outside the target range. Now, the market expects the RBNZ to cut rates by 25 basis points to a record low 1.75% at its next meeting on the 10th of November. Oil prices jumped after Russia and Saudi Arabia pledged a joint effort to limit production. They're the two biggest oil producers in the world, and both are at record or near record output. Now, OPEC and Russia together pump over half the world's oil. So, if they really do restrain production, it could reduce the global oil supply glut. Of course, that depends on them actually carrying through the cuts. It hasn't happened yet. Now, the European day today starts off with Germany's ZEW survey. This will provide us with an early view on business sentiment for October, although, of course, it's the view of analysts, not people directly involved in industry. It's forecast to be little changed, and so I think it probably won't give much impetus to trading. In any case, the expectations index is forecast to remain well below the current situation, as it has been for some time. This is not encouraging. For an update on the U.S. indicators coming out today, please watch my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.